Hello everyone, in today's video I'm going to talk about a stock that I've been gobbling up shares over the past year, and recently I've been just buying more and more shares, and I want to reveal what that company is. But now, to really help you, I want to go through the process, the metrics that I look for, what I see as upside, and of course talk about the risks so that you can do this on your own. Hey everyone, I'm going to save you a ton of time. If you just want to know what the company is and don't really care to hear my process and the metrics I look for or the risks that are involved with this company, well, I'm going to just let you know what the company is. It is Abbvie, a huge pharmaceutical company. It has been getting slaughtered, okay? It reached all-time highs not that long ago, and then it's just drastically dropping, like almost more than 10% since all-time highs. Now, I started covering this company like late last year, around September, and it turns out it's also the same time frame that Warren Buffett was buying the stock. So it just shows that, okay, another super value investor, Warren Buffett, was gobbling up shares of Abbvie, and I'm starting to gobble up even more shares. So I'm just going to tell you what I'm seeing, what are the metrics I'm looking at, what are the risks, and all that great stuff in today's video. So if you found this video super helpful, then give me a thumbs up. So Abbvie is a huge pharmaceutical company that's been making a lot of its revenue from one drug called Humira. Now, it fell off a cliff late last year, well, around September timeframe, and I started gobbling up shares at an average cost basis of, I think, $88 at that time. Warren Buffett, a deep value investor, was also picking up shares around the same time, except his average cost basis was $91. But hey, who's competing? What I'm trying to get at is that Abbvie looks really undervalued for a large cap stock. So why I got super interested in Abbvie was because, there was always this big risk with Humira being sunsetting, like it's losing its patent in 2023. And because the majority of its revenue is from Humira, I mean, that's not that great for a big pharmaceutical company. But they've taken over Allergen, which is like a big maker of Botox, and they've also taken up a lot of other drugs, and they're trying to diversify their revenue sources so that they're not heavily reliant on Humira. So that's why I was super interested late last year. Now here's why I'm not that worried about Abbvie relying heavily on Humira, because Humira only takes up about 1/3 of the revenue, which is still really big, but Abbvie's been working really hard, spending a lot of R&D money on other flagship drugs, and of course taking over Allergen, so that in the upcoming several years, the combination of all the other revenues from the other drug sources would surpass even what it was making with Humira. So this is why I'm not so worried, because you can see in its financials, it's been spending a lot of R&D money, and plus, come on, Botox is huge, okay? It's actually becoming a staple in cosmetics. Now, of course, Abbvie's revenue is not going to grow double digits like it did in the past 5 years, but the stock price has dropped so much, like as if people are expecting that the company's not going to grow its revenue for the foreseeable future. I mean, look at this. I could see in the investors' presentation that the company is still forecasting a single-digit growth for the upcoming years. And given that it's got really strong set of drugs that are coming into the market, plus Allergen, I actually think that it's overblown. Now, I want to share what I'm seeing in the company. Okay, I'm going to just look at a few metrics that gave me like, ooh, this looks really interesting. The first one is that Abbvie has had a really good ROIC, which is a return on invested capital. It is double digits, which is like saying, look, it's really good at investing its own capital and growing its revenue. Now, I'm going to use a very simple metric just to see, like, this is my quick litmus test to see, like, is it undervalued or overvalued? And when I'm looking at the past history for Abbvie, because this is a solid company, it's been around for a very long time, it's making money, it's making net income, it's making growth in its dividends, so pretty solid. It's not a growth stock. This is a dividend growth stock, not a simple growth stock. So I could really rely on its PE ratio. And when I look at its PE ratio, you could see that it's been trading really cheap compared to the past. Okay, and I'm looking at forward PE. So when I'm looking at PE ratios, it's been trading between 15 to 20-ish for a very long time. But recently, its forward PE has dropped even like as low as 7 and 8, which I would say is really significantly undervalued. Now let's do a couple due diligence checks. I could run a discounted dividend model, but you know what? I'm a little lazy, so I'm going to just rely on Simply Wall Street to tell me, is it undervalued? And you can see that it's also projected to be 50% undervalued by Simply Wall Street. Now, even when you look at tip ranks, it has a low price target of $112 to as high as $128. Now, I would say, look, the scare in putting a little warning label on one of its flagship drugs is something that is just overblown, and the stock price has fallen significantly just because of that. And I really don't think this is going to really make a huge dampening on its revenue projections. But of course, who can tell the future? I wish I can. Let's see. But I think that no matter what, it's totally overblown, like as if it's not going to grow for the foreseeable future. See, with stock prices, they go up and they go down, and it really doesn't reflect like what the company is really going to do. It just shows sometimes how people feel, okay? And these bad news are usually overblown. Now, of course, there are risks with Abbvie, like any other company. The reason why the stock has just cratered recently, I mean, it's cratered compared to a dividend stock, okay? If you compare to a growth stock, it's like no big deal. But for a dividend growth stock to drop like this, that's a big deal. So what I'm trying to get at is that, look, the risks are overblown. The risk is that, look, Humira is taking up 1/3 of their revenue, and that patent is expiring in 2023. So there is fear that, look, there's allergen acquisition and its flagship drugs are not going to do as well for the foreseeable future, that it's not going to be overtaking that the lost revenue of Humira. But is that really for real? But I believe in the management structure. We've got a CEO that has risen through the ranks to become the CEO of Abbvie. He's been around Abbvie for a very long time. Another risk I do see is that it's been taking up a lot more debt. It's because of the acquisition allergen. It kind of sucked up a ton of cash. But I also see that, look, they are trying to reduce their debt, which is a good sign. Another risk that I could see is that the drugs, well, as much as they're trying to grow their flagship drugs, we have no idea if they're going to be super successful. So only time will tell. This is the reason why this stock has had a very choppy ride in the past year. I mean, the fact that it's just slapping on a warning label for one of its flagship drugs is going to like potentially dampen revenue. So I would say if you're buying this company, just go in with eyes wide open. It is very undervalued, like significantly undervalued. But I think it's kind of a bit overblown. I mean, I guess the lowest it could go another 5% down, but I think with an upside of like $128 plus in the upcoming year, I mean, there's plenty of upside as well. So I would say this is a pretty good dividend growth stock, but just go in it with eyes wide open. Anyways, I hope you found this video super helpful. If so, give me a thumbs up. I'll see you in the next video.